Hello and welcome to this edition of Closing Trades, and we're holding out quite okay. It's really been quite that week wherein we've had one up day, one down day, and it's really been that flip-flop that one has seen. Fortunately, closing in the week strong. About a 260-point gain is what the Nifty is currently sitting on. We're hovering around the 24,900 mark for the Nifty futures. Good day for the breadth. Much unlike yesterday where you were completely skewed in favor of the declines, it's a count of 181 standing to the advances within the F&O band. It's eternal all the way, 4.5% higher on that stock today. Geo Financials doing very well, about a 3% uptick coming in there too. Power Grid, Bajaj Finance, Nestle, Trent, ITC. So it's quite the defensive tilt towards the large caps, at least in today's trading session. Not auguring all that well for Pharma, especially after the guidance that they set out post their numbers. M&M is lying flat. BEL is finally seeing some consolidation after pretty much a heady move or one-way up move for the last fortnight or so. Maruti, Bajaj Auto, Tata Motors, Eicher, Auto as well is in a bit of a pause mode sectorally. So new age, finance, technology, metals, these are your leadership sectors in today's trading session. But Srishti, what about the newsmakers?
Not many newsmakers, Aisha, but well, of course, today believe that it's a day of NASA consumers as well. All the way upwards, almost a 17% jump on this particular counter is what we are seeing. The margins, though, has seen a bit of a decline, but nevertheless, the stock is holding on to good gains. Other than that, Concor, that is also one of the newsmakers because the management did connect with us today. They are quite optimistic on the demand as well as onto the EXIM and the domestic demand. They are looking for a margin of 24 to 25% band for FY26. That stock has mildly recovered from the day's lowest point, but still holding on to that shade of red. Other than that, the life insurance counters are also doing quite well. Case in point being SBI as well as HDFC Life. These are the counters that are definitely one of the top gainers when it comes to Nifty 50. But well, of course, the newish tech counters that are holding very well. Select financials as well as the FMCG majors, Aisha, are definitely making a bit of a comeback today.
Yeah, that they're holding up, and it's been a major win for US President Donald Trump's big beautiful tax bill, as he describes it as the US House of Representatives has given it a green signal out of the chamber on a narrow vote. The passage of this bill, a major victory for the Republican leaders who have spent nearly 2 months crafting it and the past 2 days making last-minute changes to it. Democrats likewise are vehemently opposed to the proposed steep cuts to the social safety net in order to pay for some of the tax cuts Trump promised on the campaign trail last year. In fact, we've collated a comprehensive impact analysis from the bill, which is now with the US Senate. Let me take it across to my colleague Kanishka for that.
Well, the US tax bill has sent shockwaves through the energy sector, not just in the US but also back home in India. Now, before we take a check of the kind of moves that the clean energy stocks have seen, let's take a look first at the key takeaways of the bill. Now, the bill, which is now with the US Senate, aims to roll back key subsidies granted under the Biden administration's Inflation Reduction Act, including the 30% federal tax credit for rooftop solar. It shall also repeal grants aimed at cutting pollution, supporting EVs, and accelerate the phase-out of incentives for wind, solar, and battery storage by 2028, which means it imposes stringent timeline requirements that many projects may not be able to meet. Experts, in fact, have warned that this could cost over 8 lakh jobs, raise energy bills, and increase pollution levels. Now, these developments concerning the US tax bill hit US solar stocks very sharply. They witnessed very significant declines. Sunrun down 37%, Enphase 20%, First Solar was down 4.3%. Now, back home, Indian solar exporters are also feeling the heat, especially vulnerable are Waaree Energies and Premier Energies. Now, Waaree Energies, which nearly earns its 20% revenue from US, is down 9% in trade today. Premier Energies, on the other hand, which is a relatively smaller US footprint, is down about 4%. And over the year, that is in 2025, it's down 22%. Now, remember, since such policies were anticipated since Trump took over, Waaree, which is operations in Texas, had earlier said that it was prepared to adjust its manufacturing strategy in response to new tariff regimes and policy shifts. Premier Energies, on the other hand, had in January itself held its plan to build 1 gigawatt of solar cell module manufacturing facility in the US.
All right, thank you so much, Kanishka, for getting us all those details. But moving on to an ET Now exclusive then, the India business of US automotive component maker Tenneco is seeking to restructure its local operations ahead of a likely plan to file the draft document for an IPO with SEBI next month. The firm seeking an about 500 million in terms of the IPO is planning to merge the certain divisions to simplify its domestic operating structure. Anurag Joshi brings us more details on this one. Anurag?
The India business of US automotive components company Tenneco is planning to restructure certain parts of its business, and this is ahead of an initial public offering plan. Now, Tenneco India is seeking to merge certain divisions, and the idea behind this is to simplify the business structure of the company. Now, some of the divisions which the company is seeking to merge are Clean Air, Monroe, Roll, Right Solutions, and Powertrain. These are the divisions, and these control the functionalities in automotive. That includes emission control, shock absorbers, and the suspension systems in cars. JM Financial is advising Tenneco on the business integration plan in India. Separately, Tenneco wants to complete this restructuring ahead of filing its draft red herring prospectus with SEBI and the stock exchanges, and it's aiming to file the draft document next month. Now, for the IPO, it's planning a $500 million IPO. Now, in 2022, Apollo Global Management, which is one of the leading alternative investment firms in the world, that had acquired Tenneco globally. This is a New York headquartered company, and it had acquired the company for over $7 billion. For the IPO, the lead managers appointed are Access Capital, Citi, HSBC, and JM Financial.
Right, okay, that's the big exclusive that we're picking up on Tenneco's India IPO plans. But it was a good set of numbers from Honasa Consumer in the quarter gone by. They saw some strong volumes. The company aims for a double-digit top-line growth and margin improvement of 250 basis points in FY26. Snehi is here with more details on the earnings gone by.
Well, Honasa Consumer reported a beat on its Q4 numbers. It's been a very good quarter gone by for Honasa Consumers, because if you take a look at the consolidated year-on-year numbers, revenue has come in at 534 crores, which is up 13.3% year-on-year. Street estimate was 511 crores, so beat on that front. Net profit at 25 crores compared to 30 crores, which is down 18% on a year-on-year basis, but still much better than what the street was estimating at 15.8 crores. EBITDA also at 27 crores, down 18%, but once again beating street estimates of 17.5 crores. EBITDA margins have taken a hit, but the hit has been lesser than what the street was estimating, so beat on the EBITDA margins front as well. EBITDA margin has come in at 5.1% compared to 7% year on year. There's been a sequential improvement also noticed in terms of revenue, that's up 3.1%. EBITDA and EBITDA margins have also done well on a sequential basis. The real highlight here is the underlying volume growth has come in at 21.2%, and Q4 has largely been volume led rather than value led. Now remember, when the company was going through some troubles in their trade distribution channels, they took some recalibration moves and some strategies that are now showing color, because modern trade and e-commerce sales have gone up by 20%. So that's worked out for the company very well. Mamaearth has entered the top 5 in face wash market share as well. Their focus categories, which is face wash, shampoo, sunscreen, are back to double-digit year-on-year growth in Q4. Dermaco has also crossed 100 crores in ARR in offline channels, and younger brands as BBlunt, Dr. Shades, Aqualogica also saw a 30% year-on-year growth in FY25. Overall, it's been a good set of numbers coming in. Concall, they have said that they are targeting double-digit top-line growth and EBITDA margin improvement of roughly 250 bips in FY26. Their A&P spends will decline, and they aim to expand direct distribution reach from 1 lakh outlets to 1.5 lakh outlets in FY26. Overall, positive commentary, good set of numbers, and a beat across all fronts.
Right, okay, Snehi, we'll leave it at that. Let me welcome on board Dhananjay Sinha as well and find out what he's making of the market right now. Dhananjay, hi, good afternoon. Good to have you on the show. Let's pick it up from where my colleague just left. Honasa Consumer limited as the BPC listed pool may be, do you think the numbers were impressive? And given the kind of mammoth underperformance that one has seen from the stock at 320 thereabouts, do you think it makes for good value?
So basically, I'm just looking at the numbers. There has been a PAT decline, isn't it? It's about 18% decline, and there is a sort of a revival in the volume, is what we heard of the company. So basically, we have to really look at the margin trajectory. So essentially, if the volume has been on the back of sort of lower margins, we'll have to be careful about how the turnaround happens in terms of the profitability, etc. So I would say that one has to really take a view whether this turnaround in volume it will translate into sort of expansion in margins and all. So I think the reason why the stock may have actually seen reduction in valuation essentially is because of the profitability issue. I would say that there is a significant rise in the volume, but I would say this has to translate into sort of EBITDA expansion. I think that is what we'll have to look at, and we have to also understand whether there has been a sort of any tailwind that would emerge from reduction in the commodity prices or not. So I think we'll have to wait for those variables to turn around before we take a very conclusive view on this.
All right, that's the view coming in on Honasa. But some of the other news flow, the board of the RBI is reviewing its economic capital framework to assess the surplus liquidity transfer to the government. It's a crucial RBI board meet today. Let's go across to my colleague Ankur, who is joining us with more details on this one.
Yes, Reserve Bank of India may announce a dividend transfer to government very soon. As we understand, a meeting is going to be held. And remember, last week there was a meeting which was conducted by the central bank on the economic capital framework, which is the basis of determination of dividend transfer. Remember, last year there was a record transfer of 2.1 lakh crore to the government, but the expectation this time is even more. All the economists are penciling in somewhere between 2.5 to 3 lakh crore and even more to the government this time. But it will be interesting to see what will be the scenario as far as contingent risk buffer is concerned, because last time it was kept at 6.5%. The mandate is to keep between 5.5% to 6.5%. So that will be decided in the meeting which is likely to be held. Now, as far as union budget is concerned, we understand that 2.56 lakh crore was the amount which government was expecting as dividend transfer, not only from Reserve Bank of India but also from other PSUs. But if you see the expectation which is there in the market is much more than that, and hence the bond yield movement is happening.
All right, thank you so much, Shankar, for getting us all those details. So all eyes on the final outcome of this board meet. But moving on, let me also welcome on board Arpit Beriwal, Manager Derivatives Analyst and Equity Research at Motilal Oswal. Hi Arpit, great to be speaking with you. Firstly, help us with your take on the markets. A very good rebound on the benchmark indices, but now the key question is, can we expect these movement on the upside to sustain going forward? Because for the whole week, Arpit, it's been quite a volatile week.
Very good afternoon to all. So if we talk about the headline indices, as rightly mentioned, Nifty, Bank Nifty have been quite volatile. But if you look at the chart structure, the bigger time frame is positive, and on the weekly time frame also, if we talk about Nifty, the structure of higher lows is intact. Yesterday you've seen a very sharp recovery from its lower level. So overall Nifty, a bias is positive till it holds about 24,750 levels. But at the same time, 25,050 is a key hurdle level that we have to watch out for. So overall Nifty, a bias will be positive till it holds about 24,750. Now talking about Bank Nifty has got stuck in a range from last 4 weeks in a band of 1,000 points between 54,500 to 55,555. But the good part is that it is holding above its 20-day mark. So overall, looking from the overall market perspective, we are expecting positive bias. Nifty and Bank Nifty likely to consolidate with a positive bias, but the real action is in broader market, the mid cap and the small cap, where we are seeing a very good, healthy advanced decline ratio in favors of bulls. So that is where the real action is there, and very good stock specific action is seen. So we have to keep index a range bound view. Along with that, very good stock specific action is there, so we can play it accordingly.
Right. Dhananjay, I just want you to come in on, the RBI dividend, because the anticipation, like my colleague was highlighting, is higher than ever before. On the upper end of the estimate, someone is also pricing in about 3 lakh crore rupees of a dividend. You think that will inject a fair amount of liquidity in the system, and the direct beneficiaries could perhaps be banks?
I think that is how the market is pricing in. So you look at the banking sector liquidity, it is already turned into a surplus. It is the LAP balance is somewhere around 2.5 lakh crores. So if you have, my estimate is roughly in the region of what the government has actually projected. So I think it will be roughly about 2.25 to 2.5 lakh crores, basis the analysis that we have done. Everybody has their own estimate. But so the overall liquidity might actually increase because of the injection of release of such dividend. So you might actually see the overall liquidity rising to almost like 5 lakh crores. So what it has done is to reduce the risk-free rate. If you look at 10-year yields, are actually fallen to 6.22% from 6.8% 3 months back, and the expectation is that it will actually reduce the short-term yields as well, and that should benefit the lenders who are dependent on short-term borrowing to fund their liabilities. So I think some of the NBFCs might actually benefit by way of lower cost of fund, etc. I think that's broadly what the market is sort of also pricing it. Also, the fact that in general the lowering of risk-free rate sort of also buoys up the valuation in general. I think that is what seems to be happening. I mean, rate sensitive sectors might actually see a betterment in valuation or sentiment arising from easing of the risk-free rate.
Right, and that's exactly what's been reflective in the way the banking pack has also moved so far this year. But tell you what, we'll take a very quick break. We're still holding up quite okay, about 750 points up in the green for the sensex. Banks are looking good, and an index level as well. We're pretty much still sticking by with the high point of the day. About a 1% move is what you're currently seeing. We'll take a break, come right back, continue tracking markets on the other side.
Nifty now, while the market's holding up steady. But with this, let me also welcome on board Jatin Kedia, who's joining us on the show right now. Hi, good afternoon, Jatin. A lot of sector churning underway, because for today, though the benchmark indices are holding up, but other than that, we have seen some of these defensive FMCG staples making a comeback. Life insurance companies are doing well. Tell us, which are the pockets that are looking good to you?
See, in today's trading session, we are seeing the action pick up in the frontline stocks. However, some of the recently moved up or active sectors like say capital market segment is doing well. So in that we like MCX. Apart from that, CAMS, which is still not given a breakout but is on the verge of giving a breakout, is also looking good from a trading perspective. So I believe that apart from the frontline stocks, some of the capital market space stocks are buzzing in trade today and are looking positive from a short-term perspective. So CMS from the capital market space should be our preferred pick in this in today's trading session.
Right, okay, that's the take coming in right now on the markets. Just looking at, some of the big buzzers as well in trade and how they're moving up. Look at an Angel One and a BSE, both looking very smart. BSE, yes, had a bit of an aberration yesterday when, there was all that talk about the regulator notifying which exchange takes which day as expiry. But that stock's still holding up a solid 5% as we speak right now. So that's really what's happening on some of the capital market names. In fact, the entire cluster is looking very smart. Tharanjay, the entire capital market theme has done very well, not just in the last 1 year, but pretty much from the COVID lows. But where is it that you still find, bearable valuations where one can still buy afresh?
So I think, as far as the capital market is concerned, I think it is largely to do with the fact that there has been a significant increase in participation by retail investors in the market, and sort of directly or even through the mutual fund route. So I think overall the exchanges have actually done well. Even the capital market, the mutual funds, AMCs, all those guys have actually done very well. So I think this is kind of a structural thing at this juncture. I mean, the kind of volatility that was seen is largely because of the sort of a correction in the broader market and the reduction in the participation in terms of volumes by retail investors. I think there is some comeback that is happening over there. I would say, this is a sector that might continue its structural ride as we go forward, because we think that this whole financialization that has been happening will be a sort of a long-term phenomenon. I think the penetration is still low. People want to catch up in terms of wealth creation, etc. So I think the sector has a good prospect going forward. So.
All right, but Dhananjay, also give us some sense on what are you really penciling in when it comes to some of these brokerage-related counters. Off late, these stocks are holding up well. Anything incremental that you are factoring in with respect to these counters as well?
Well, I think this is linked to the market scenario in general, and I think it's sort of this whole cluster of sectors actually move in tandem. And I think what will be important to really look at is how the primary market or the fund market actually starts to fundraising by corporate starts to revive. I think because of the recent volatility that we have seen in the markets, I think there is a sort of lack of momentum as far as fundraising is concerned. So I think that part of the segment is somewhat volatile at this juncture. But I would say the run up had also happened quite significantly in general. So I mean, retail led broking firms have done well, but I think broking firms also do a lot of fundraising and all, because of which there has been some volatility there. But generally, the entire cluster of the capital markets move in tandem.
Right. Arpit, what is your own sense? Both Angel One, BSE after a day's break are giving fresh breakouts today. Anything that's looking tradable?
Has one of the stupendous runners in last couple of months. And within the exchanges space, if you look at the chart of MCX, particularly MCX looks very strong, because till now it was consolidating from last couple of days, but today it is again giving a fresh range breakout above 6,400 levels. So I think positionally we can expect good 7 to 8% rally towards 6,750, 6,800 levels going forward. Along with that, second would be within this space, that is the platform, that is CDSL. So if you look at the chart structure of CDSL, a very strong base formation is seen on the monthly and the weekly setup. And after a long time, it has given a weekly range breakout above 1400 levels. So slowly, steadily, we can see a good momentum towards 1500, 1520 plus levels. So this too would be a preferred picks within this space.
All right, so CDSL as well as MCX, let's watch out for that. And CDSL especially, that has seen a phenomenal run up in the month gone by, or rather this particular month itself. But other than that, within the broader market space, let's have a look at some of these other counters, and select metal counters are also holding up well. Case in point being Hindustan Copper. Jatin, if I can have your take on this counter, because of late this stock has been holding on above that 220 odd mark. What do you make out of it?
See, on the daily charts, it has broken out from a 5-day consolidation on the upside with above average volume. So it's a price volume breakout. Now this rally is likely to continue towards 249 to 252 levels, wherein the resistance in the form of the weekly upper Bollinger Band is placed. So yes, today the breakout which we have seen is likely to continue during the next week as well. So we expect the rally to continue in the case of Hindustan Copper. In terms of support, 232 is a very strong support for the stock.
Okay. Well, that's the take coming in on some of these, actively traded names. But I just want to bring up the chart for Sun Pharma because while the India business grew quite strong, it was weak US and a cautious guidance amidst global uncertainty. That's really not augured well for the sentiment on the stock. After a gap down, it's unable to really resurrect itself, still lower by 2.5% and 3% knockoff on the futures right now. Dhananjay, what is it that you're making of the pharma pack right now, and where is it that you think are still opportunities? Because clearly it's the US business, because of the tariff uncertainties that one has seen across the board, wherein there is a still little bit of question mark on how growth is going to pan out from here.
So yeah, I think the uncertainty is very much there. I think with respect to tariff, I think the US administration is very much, it's kind of examining the kind of the input context and the whole research that is going into this whole space. So I think the uncertainty with respect to tariff is very much there. So I think the volatility, hence, for the pharma stocks has been there ever since the 1st of April when this whole, Liberation Day announcement happened. So I think the market, the sector has been undergoing a lot of jitter. So I think with respect to the stocks that we have sort of highlighted, we are very selective. We're talking about Sun Pharma as an opportunity, and Cipla are two stocks. These are the two stocks that we have been highlighting, and and we see a decent upside of roughly about 14-15% in these two names. So I think we are fairly selective in the pharma stock given the context of the risks that you sort of mentioned.
That's the take on the pharma, being very selective, and Sun and Cipla are some of the preferred bets. But with this, Dhananjay, we let you go on that. Thank you so much for taking the time out today. But sticking with the pharma theme, with the rising concerns over likely tariffs and rising pricing pressure, which pharma player will stand to gain the most? A Systematic Group's Vishal Manchanda shares his pecking order in the space. Go across and listen in.
If I look at the large cap space in the pharma, Sun Pharma is one which probably will be doing 2 or 3 large launches in FY25, FY26, and these launches, each of these launches can be a $200 to $300 million market opportunity. So if I look at what companies can deliver in terms of growth over a 2 to 3 years horizon, Sun Pharma is chasing the largest market opportunity, and they are prepared in terms of the regulatory approvals. So those are in place, and they just need to kind of execute on the commercial level. The fastest growing company in IPM is Sun Pharma. They have 33% of their sales coming from India. And I think if you look at another name, Ajanta Pharma, they are also around 33% of their sales from India. Even they are growing around that 12-13% level in India. So those are the two picks I would look at, and I would prefer Sun over Ajanta.
Okay, Sun over Ajanta, that's the word coming in from our pharma expert. But Jatin, half an hour to go before we shut shop for the day. Any closing ideas you may have for our viewers?
The first one is from the capital markets segment, that is CAMS. We believe that on the daily charts, it has been consolidating since last 3 to 4 trading sessions. A triangle pattern is in formation. We are expecting or anticipating a breakout in CAMS. So it's a long idea with a stop loss placed at 38.30 for a target of 4,050 on the upside. Another recommendation that we have is Crompton. So Crompton, after taking support at the 40-day average, is resuming its uptrend. So that becomes a buy. Stop loss should be placed at 354 for the target of 373 on the upside.
Right. Arpit, what about your strategies?
So you can see we have two counters, one from the insurance pack and second from the metal pack. As financial stocks are seeing good momentum, so one would be from the insurance pack, SBI Life. So SBI Life given a technical range breakout on the daily scale after almost 19 sessions, and risk reward quite looks good. So this would be a good idea for next couple of days idea. So we can go long with keeping stop loss of 1765 for an upside move towards 1870. Along with the second idea would be from the metal pack, that is Hind Copper. So if we see metal stocks are witnessing good momentum, and today it has given a fresh range breakout above 232 levels, a strong bullish candle. From here, definitely 3 to 4% rally can be seen towards 245 and then 250. So this would be a two ideas for the BTC setup.
Right. Okay, let's take a very quick break on that note. And as we do that, the Vedanta Group has committed an additional investment of 30,000 crore rupees in the Northeast. The founder and chairman, Anil Agarwal, says that this will take their total investments in the region to about 80,000 crores. And he sees major potential for double-digit growth. Sameer Dixit, my colleague, caught up with him.
के साथ ही नॉर्थ ईस्ट के साथ में बस एक दो सवाल और लेना चाहूँगा कि जैसे आपने कहा कि आप एक्सपेंशन की बात कर रहे हैं, आप आगे बढ़ने की बात कर रहे हैं, रेयर अर्थ मेटल पर भी मैं ये पिछले कुछ समय से देख रहा हूँ कि यू आर लुकिंग वेरी एग्रेसिव, आप उस दिशा में ग्रुप को आगे ले जाना चाहते हैं, थोड़ा स्ट्रेटेजी अगर आप शेयर करना चाहें।
हाँ, हम लोग बिलो द ग्राउंड समझते हैं बात को, क्योंकि हम लोग आज के दिन टेक्नोलॉजी हमारे पास सबसे एडवांस है। हम टोपोग्राफी करते हैं, हम जमीन के अंदर में बिना खोदे हुए भी पता लगा लेते हैं क्या चीज़ है वो। ये काम में ये डिफिकल्ट काम है, रेयर अर्थ है, क्रिटिकल मेटल है। ये बोलने में आसान है बट करने में बहुत मुश्किल का काम है, और इसमें मेरा दिल लगा हुआ है। और सबसे बड़ी बात हुई है कि पहले सहयोग नहीं मिलता था,
बिल्कुल
सहयोग नहीं मिलता था। अब इस सहयोग इतना जबरदस्त मिल रहा है, अब उसको आगे बढ़ा रहे हैं। हमारे साथ साथ हम बहुत आह्वान करेंगे, हमारे जितने भी एंटरप्रेन्योर हैं, हमारे स्टार्टअप हैं, वो भी ये टेक्नोलॉजी में आगे आवें, क्योंकि इज़ ऑल अबाउट टेक्नोलॉजी। रेयर को निकालना, उसको सेपरेशन करना, ये बहुत मुश्किल काम है। दूसरा, चाइना ने पूरे का पूरा कैप्चर कर रखा है ये, और उससे वो रूल करना चाहता है दुनिया को। हिंदुस्तान में हमारे पास बेटर डिपॉजिट है, बट उसको एक्सप्लोर करना बहुत से लोग चाहिए, आगे आने वाले प्राइवेट सेक्टर में चाहिए। लोगों को हिम्मत दिलाएं, लोगों को फंडिंग करें और आगे बढ़ेगा।
जैसे कॉपर ऊपर की हम बात करते हैं तो विजन या टारगेट क्या देख रहे हैं?
कॉपर तो मेरा हिंदुस्तान बहुत दिल दुखता है। कॉपर का डिपॉजिट हिंदुस्तान में सबसे बड़ा है, गोल्ड का डिपॉजिट सबसे बड़ा है। दोनों हम 100% इंपोर्ट करते हैं। हमारे पास हिंदुस्तान कॉपर है, उसके पास माइंस जो हैं वो राजस्थान में हैं, उनके पास माइंस हैं झारखंड बिहार में हैं, उनके पास माइंस हैं मलांचखंड में हैं, और बहुत अच्छे लोग हैं। लेकिन उसका नेतृत्व जो, जैसे हमने हिंदुस्तान जिंक लिया, वो हिंदुस्तान कॉपर से बदतर हालत में था, आज वो वर्ल्ड का नंबर 1 प्रोड्यूसर हो गया है। हिंदुस्तान कॉपर भी नंबर 1, और पूरे हिंदुस्तान की जितनी कॉपर की डिमांड है उसको भी पूरा कर सकता है, और बाहर में भी अच्छा नाम कर सकता है। हमारे गोल्ड की इतनी क्षमता है। आप बार बार ये बोलते हैं कि आप नई डिस्कवरी करके, नया एक्सप्लोरेशन करके नई माइन ले लीजिए। नई माइन को काम करने में 10 से 15 साल लगते हैं। ये जल्दी में काम नहीं हो पाता है, और थोड़ा जल्दी भी कर सकते हैं।
Welcome back to Closing Trades right here on ET Now, and at the bottom of your screen you have the numbers coming in from Ashok Leyland, and it seems like a good set, especially on the margin front, because the margins have seen an expansion not just on a YY basis but also on a sequential basis. 15% is what the company has clocked in. It's almost a 12.5% growth on the EBITDA as well, but believe that a lot is already in the price, because back in Q3 the company did come out with a very good outlook for the times ahead. They believe that the worst is behind for the MHCV segment. Mid-teen mid-teen margin is the medium-term goal for the company. So still some time away, or still some few numbers away to reaching that goal. But 15% is what the company has clocked in. 15 to 17% is the guided range. So that is something that we'll try to get the management commentary on. So all in all, a decent set coming in from Ashok Leyland, and the stock is trading absolutely flat right now. It was experiencing a bit of a mild uptick in terms of the stock performance, but is now seen to be drifting lower. But Arpit, if I can quickly have your take on Ashok Leyland, how do you see the build up for Ashok Leyland, and how is the technical setup looking like?
Auto stocks has seen good momentum, and if you talk about particularly Ashok Leyland, on the monthly chart, if you see, it has negative formation of lower highs above 235 levels. On the daily and the weekly, some cool off is seen, but major support is seen here around 232 levels. And till the stock trades about 230 to 233 levels, the bias will be positive towards 242, 245 levels. So overall bias will be positive till it holds about 232 levels for an upside move towards 245, and then positionally 248 levels.
All right, so that's the take coming in on Ashok Leyland. The stock is turning out to be a little volatile. But Sunny, your first thoughts on Ashok Leyland numbers, because of late we have seen that the commercial vehicle players have been doing pretty well, case in point being Tata Motors as well, wherein the margins held steady for their CV segment. What is that you're penciling in for Ashok Leyland, and your first take on the numbers? A bit of a margin improvement, but overall, do you believe that the much of the positives are already in the price?
Yeah, good afternoon, and thanks for having me on the show. Yeah, definitely. I think if you look at margin number, look at least optically looking slightly better than the street estimate. But ultimately, what street will look into is the growth guidance for FY26. So we believe that maybe second half of FY26 is a time where on the low base, and because of this increase in government push on capex side, we may see a very healthy recovery in terms of volumes as far as medium and heavy commercial vehicles are concerned. And at the same time, we would like to hear commentary from Ashok Leyland on bus division. So their EV bus division of late has been sitting on a very good order book. So what is the progress over there, and in terms of execution at current market price? I think most of the positives are already in the price, and overall our estimate is that over the period of next 2 years, the earnings growth can be to the tune of 12 to 13% CAGR. So kind of mid-teen kind of earning growth we can see as far as Ashok Leyland is concerned. Overall, broadly it looks like inline set of numbers, slightly better than expectation, at least on margin front.
Right. Okay, in the meantime, some important news and big comments coming in from the government sources. The government has not received any proposal to increase the defense allocation yet, but will be considering it if needed. Right now, the defense budget is sufficient, is the word coming in. Let me take it across to my colleague Prakash Priyadarshi and get in more details on the same.
The government sources are suggesting that the defense budget is sufficient to meet any requirement, and in fact, there is no such proposal at this point of time to make higher allocation. But the government will consider any such proposal increasing a budget if it comes from the concerned ministry. However, Defence Acquisition Council has already provided emergency approval to make further procurement based on the Army's requirement. Along with that, when it comes to the issue related to providing further financial assistance to Pakistan by the IMF, sources are suggesting that this issue was raised with the IMF. In fact, IMF's own data shows that the arms purchase by Pakistan increased after every financial assistance provided by the IMF. And therefore, these issues were raised with the members countries as well. And the government of India is well prepared to put forward its viewpoint during FATF meeting slated for June. That's an important development coming in, that the government is planning to grill Pakistan at every forum. Along with that, when it comes to US government decision to impose tax on outward remittances, sources are indicating that, of course, there will be an impact of the US government decision, but an assessment will have to be made about the impact, and we'll have to see whether these issues could be included in the bilateral trade negotiations with the US.
All right, thanks so much, Prakash, for getting us all those details. But do hang on as more details are pouring in with the next GST Council meet is expected to be held soon, and decisions on the rate rationalization and compensation cess will be on the cards. Prakash, give us some more details on this one as well.
Yes, government sources are suggesting that the next GST Council meeting is going to be held very soon. In fact, by the end of June. In fact, the ministry has started working on the proposal. We're given to understand that the issues related to rate rationalization, rate simplification, and compensation assess will be discussed in the next meeting. That's an important development coming in as the GOM on rate rationalization has already submitted its report, and it is expected that the GST Council will discuss these issues in the next meeting. Along with that, when it comes to state of economy at this point of time, government sources are suggesting that there is no question about the India's growth trajectory. In fact, India's economic fundamentals are strong, and revenue growth will improve on the back of a better monsoon. That's an important development coming in on the issue of AGR dues. Sources are suggesting that the Telecom Ministry has not sent any such proposal regarding AGR dues against Vodafone Idea and Airtel.
In the meantime, JSW Steel is expected to post a good set of Q4 numbers, which is likely to be aided by lower coking coal prices and volume growth, also improved cost efficiencies. Let's take it across to Ashesha and find out what her poll is penciling in.
Well, yes, we are expecting strong set of numbers on a sequential basis for JSW Steel this time around. Revenue is expected to see an uptick of about 5% on a sequential basis, led by volume growth. So strong volume growth coupled with lower coking coal costs in the quarter gone by and operational efficiency will aid numbers for JSW Steel in the fourth quarter. EBITDA is expected to see an uptick of a solid 15% on a sequential basis, led by lower coking coal costs. Remember, iron ore prices rose a tad bit in the quarter gone by, so that could negatively impact the numbers, but all in all, strong set of numbers are expected. As far as standalone EBITDA per ton is concerned, that could come in at about 8,800 rupees per ton, which will be an uptick of a solid 12% on the sequential basis. But management commentary on outlook going forward, especially when it comes to volume growth, when it comes to pricing, will be crucial this time around. Capex and debt plans of the company will also be crucial. And remember, safeguard duty was imposed by the government at the rate of 12% on steel products in the quarter gone by. So any management commentary that comes in on safeguard duty and its impact on the steel industry will also be very crucial. But all in all, we are expecting strong set of numbers from JSW Steel. Revenue growth of 5% sequentially. Margins are expected to expand, and EBITDA per ton is expected to come in at a solid 8,800 rupees per ton, up 12% sequentially.
Sunny, just wanted to get to you, given that we're at the fag end of the earnings season, where is it that you find the positive surprises and where have been the biggest misses?
Yeah, so coming to earning, I think it was a kind of mixed bag across the sector. So within banking, again, the few of the banks have reported a good set of number. Case in point, ICICI Bank, HDFC Bank, Kotak reporting inline set of number, whereas banks like Axis Bank has slightly reported a number slightly below the analyst expectation. Cement and metals, at least both the sector, we have seen that worst of the earnings disappointment is behind us, and there is a sequential improvement, at least in terms of profitability for both these pack, aided by again the same story that input cost is coming down, and at the same time there is an uptick in realization. So both this segment, cement as well as metal, continue to report a good set of number, and again we are expecting that both this pack will continue to report a good momentum as far as earning growth is concerned during the first half of FY26. Moving on to auto, again auto was a kind of a mixed bag. So we have seen on one hand likes of Mahindra and Mahindra, or for that matter Force Motor, reporting a good set of number. On the other hand, within two-wheeler pack, TVS Motor has reported good set of number, whereas there was a disappointment from likes of Hero MotoCorp. So again, a mixed bag as far as the auto sector is concerned. Moving on to the consumption, again within consumption we have seen a kind of tapered volume growth as far as the consumer staple businesses are concerned. But within that, Marico stood out with an kind of 6% volume growth number. And on the consumer discretionary side, we have seen a kind of a decent set of number from jewelry pack, whereas value retail segment continue to report healthy SSSG growth. QSR, we have seen a decent growth despite of coming off from a signally strong quarter of December. Despite of that, we have seen a decent quarter as far as the March numbers are concerned. So again, what I would like to sum up is that it was a kind of mixed bag as far as the earning growth is concerned. So on if I try to classify between mid cap, small cap, and large cap, so we have seen a very good set of numbers from many mid cap and small cap companies, and there we are finding that the growth momentum may continue for next 2 years. So I think ultimately market is rewarding the companies which are reporting good set of numbers, especially from mid cap and small cap pack.
All right, so those are the sectors that one can be really watchful of, but just a few minutes left before we should shop, and this week has been really interesting one because we did start above that 25,000 mark for the Nifty. We are just 150 points away of that, but one way up, one day down was really the trend that we caught up, but Nifty Bank actually managed to claw back to near to those levels from where we did start this particular week. But within the financials basket, Arpit, if you can help us understand that any particular stock, especially from Bank Nifty, where do you believe that the strength can come from, even from these levels, given the fact that the Bank Nifty, at least for today, is showing a bit of a resilience and once again clawing back to the Monday's opening?
So if we see overall bank flow has been consolidating from last many sessions, but today, as rightly mentioned, it is giving a strong closing after 3 to 4 weeks. And if you look at the chart setup of Axis Bank, so Axis Bank has been trading in a range from last almost 9 sessions between 1180 to 1200 levels. But today, finally, it has managed to give a highest daily closing on the daily scale, and from here on it is on the verge of its falling supply trend line breakout above 12-15 levels. So that I think from here the risk reward is quite favorable, and from here on we can see a movement towards 1240, 1250 levels for next couple of days to weeks time. So Axis Bank would be a preferred pick within the banking space with key support near around 1180 levels.
All right, those are the that's Axis Bank for you within the banking space. That stock is holding on to the decent gain, but metals as a pack that has been shining bright. Arpit did highlight one of those metal counters, that is Hindustan Copper. But Sunny, what's your view on the metal pack? Because I believe that it's the second straight week where the metal counters are shining bright. Though JSW Steel numbers are awaited, but within the metal pack, any pocket that is looking good to you?
So within metal pack, we continue to remain constructive on non-ferrous pack. So companies like Nalco has reported a solid set of earnings with an robust growth outlook. So we find the risk reward to be favorable as far as Nalco is concerned among the aluminium pack. Steel pack, as discussed earlier, so I think worst is behind the entire steel pack. So because of this safeguard duty, the NSR net sales realizations are likely to improve going forward, and with an benign input cost, I think at least the steel players will expand profitability as far as EBITDA per ton is concerned. So we continue to remain bullish, constructive on steel pack also. And if somebody want to ride on stainless steel side, so we feel that one can ride that story through manganese. So we feel that kind of bottoming out as far as manganese prices are concerned. So companies like Moil and Sandur Manganese, if somebody want to take a kind of high risk, high return bet, so that is something which we are bullish on.
Right, okay, gentlemen, all of you, thank you so much for your time and joining in today on the show. In fact, as we wind up the week and the day, I mean, I'm going to hand it over to Snehi for the closing trades.
Well, absolutely. Let's take a look at how today's trading session has panned out on the index front. First of all, a 1% uptick coming in. So it seems like the tepidness that we have seen over the course of the week has seen some respite towards the end of the week, because a 1% uptick is what we are seeing on the Nifty 50 front. 24,850 thereabouts is where we are going to be shutting shop. No visibility as of now on the 25,000 level, but very close to 24,900 is how we are going to be ending this week. Sensex 2 in tandem with the Nifty, 1% uptick coming in on the Sensex as well in today's trading session. Above 81,700 is where Sensex is right now. Advanced decline ratio has been in the favor of the advances ever since the get-go, so that has looked good for our session today. Nifty Bank as well, 0.8% higher. India VIX has cooled off by another 0.5%, so looking good at least on that front. The broader markets have also done very well in today's trading session, but have slightly underperformed the benchmarks. Let's pull up the Nifty Mid-Cap Index, a 0.6% uptick coming over here and a 0.7% uptick coming in on the Nifty Small Cap Index. So that is how the broader end of the market has performed in today's trading session as well. Top gainers in today's trade, Eternal, which was erstwhile Zomato, 4% uptick over there. HDFC Life, Geo Financial, Power Grid, ITC, of course, one of the big newsmakers in today's trade. Inline set of Q4 numbers coming in for ITC. So that's the reason the stock was up and away. Nestle, SBI Life, Adani Enterprises, all of these stocks were top gainers today. Barely 2 or 3 stocks in the red from the Nifty 50 pack today. You had Sun Pharma, muted set of numbers coming in, 2% downtick coming in on that stock today. Grasim was lower on flattish set of numbers. BEL absolutely on the flat line. Let's talk about some sectoral gainers and losers in today's trading session. It was the day of the FMCG stocks, a 1.5% uptick on that index, followed by IT, bank, metal, energy, media, PSU banks, auto, realty. These are your sectors in the green. Pharma is the only sector that has ended in the red today. That was led lower by names like Glenmark, Alchem, Mankind. So some of the names are players from the pharma space were lower, but of course Sun Pharma weighing on the pharma index quite heavily. Some other big newsmakers to talk out for, to watch out for: Concord, GSP on the back of numbers. Good Industries did very well. Honasa Consumer through and through winner in today's trading session, as high as 14% at one point of time, and very good moves coming in for Honasa as well on the back of good Q4 numbers. Well, locked in upper circuit, so that's the uptick that we have seen on Honasa as well. But on that note, we'll wrap it up on this edition of Closing Trades. Close to 24,850 is how we've shut shop for the week.